This is the briefing for Friday, November 11th. Well, yesterday's CPI report certainly gave fuel to the markets, especially the stock indices, in terms of a rally. And they continued through today. Now, it's going to be important to determine really what is happening in the future over the next week or so based on the current price development and the structure of this development. Now, one of the things that I talked about in last night's briefing was the fact that we reached a point of being extremely overbought, that the market closed at the high of the day, suggesting that they wanted to go higher in trading this morning and today. Once they close at the high of the day or at the extreme of the day, it suggests they would have gone higher or lower unless the market had closed, which the market did close. So we did get follow through in today's trading, and I suggested there potentially would be follow through after you have such an extreme day as we saw yesterday. There's typically follow through the next day, but the real key is what happens internally, what happens with the structure of that rally. Now, we did have a divergence. I discussed that last night and warned to watch out for a potential divergence in market breadth, and you can see right through here that we did have a divergence at the open. That brought us, we had this move to the upside, and then of course this move back to the downside based on that divergence. But then the market continued to rally, even based on continuing weak breadth and weakening breadth. The same thing occurred in the NASDAQ. It opened up with a divergence in breadth. Also, you can see that we had fairly decent volume in yesterday's trading, even going into the close. This is the open. Typically there are spikes at the open. That's mainly because there's a lot of orders that are placed on the markets prior to the day session open, and they hit the market all at one time. So that's why you get those volume spikes. But if we look at the overall trend of volume, it gives us a little bit better picture. And then we had another spike going into the close, which appeared to be buying as more and more people came in. Volume came up, and we closed at or near the high of the day. Now today is a little bit different. You can see that we opened with volume falling and declining and ticking up slightly going into the close. Same thing occurred in the NASDAQ. So from a structural perspective in today's trading, it really was a weaker rally than yesterday, but we still rallied. So it's going to be important to see or plan a strategy for the first part of next week. Now, this is a daily chart. This is the spiders, the Qs, and the Russell and the IWM. Now, for the last, I think, 2 weeks, I've been talking about how this was a downtrend, and you had a series of lower highs and lower lows, and that when this occurred, when this day occurred, I think that was a Thursday, that it suggested the potential for the possibility of some type of greater degree counter trend rotation, not this type of thing where we had this series of lower highs and lower lows. And in fact, when the spiders broke through this high, that then confirmed the fact that if you look at this as a run, pause, run, pause, run, pause, that in a greater degree time frame, this is a run and this is a pause. Now, we know that counter trend rotations happen in different types of price development functions, or price development functions, but we also know that they can happen in three-step counter trend moves, where you have the first leg, the second leg, and the third leg. And often, not all the time, there is equality between the third leg and the first leg. So a lot of times, as you've probably noticed from these briefings, if you've been listening to them, is that I have done projections, and it's pretty amazing how they come in right at the exact point. Now, if you look at this move here, this being a leg 1, this a leg 2, the projection for leg 3 for the spiders was at 390, and you can see that the spiders came right in at 390 and then started a decline. I think it was the first part or the end of last week, I talked about the fact that this move here had the appearance of the potential for a leg 2, suggesting that this was a more complex counter trend rotation, greater in degree of time and price, where this is a leg 1, 2, 3, but this is a leg 1 in a greater degree time and price function. This is the leg 2 and this is the leg 3. Now the projection for leg 3, and I want to stress here that it's an area for one thing, it's not an exact point, even though this appeared to come in exactly at 390, where this leg was equal to this leg. But it also can fall short of that, or it can go slightly through it if this truly is a counter trend rotation. So the projection for the third leg is at the 410 area. Now that's an important area, and I'll get to that in just a few minutes. So what I'm looking for is the potential that the spiders closed near, I think it was around 399, 398 today. So they are not far away from reaching this 410 level. That's going to be very important. The Qs were a little bit different. You can see the Qs had a three-step counter trend rotation here. That projected to end at 290. It didn't make it. In fact, the resistance was the last previous lower high from this downtrend here. So that kept the Qs or the NASDAQ from trading through it. Then we had the rotation down, much deeper rotation down than in the spiders. And then of course then the rally back up. Now this here projects to come up to the 290 area once again. So it is possible that the Qs are getting pretty close to this. Now you can also see the lower breadth readings in today's trading. Now this is the Russell, and of course you can see the Russell was a little bit different. Resistance in the Russell, it really did not develop into a three-step counter trend rotation. It was a pause where we had just rotation here, then extension up, and then another rotation, and then extension up once again. 190 is upside resistance in the Russell or the IWM. Please note, once again, that volume in the Russell is beginning to trail off. Volume in the spiders was falling off. If you look at this rally here, you can see if you drew a trend line, the trend line would basically be lower, and the same thing in the Qs would be basically flat, of not increasing volume at either point. Now, looking to the longer term aspect of it, this is just a greater degree time frame chart. You can see the 1, 2, 3, 1, 2, and then a 3 projecting up to 410. Now it happens that 410 comes in right at the next upside resistance, about 411, which was this last lower high. Then above that, the next level of resistance is 430. So once again, looking at volume on a daily basis, market breadth on a daily basis. Now this is also new 52-week highs minus 52-week lows. There's no expansion of that. So that does suggest that while price appeared to be impulsive, I have some question about the internal structure of it, as it may not be as strong as appeared in price development. With that said, strategically for the beginning of the week, I have to assume at a minimum that we're going to be testing this 410 area in the spiders. What happens there, what happens with the structure, with the market internals as we reach that 410 area is going to be very, very important. Now, I also want to say that this is a market that is driven by news. The news of a better CPI print, of lessening inflation, led participants to believe that the Fed may begin to back off on interest rate increases, and that's what's fueled this rally. So if something happens or a Fed governor comes out and says something different, then the fuel that is fueling or is driving this rally could be drained from it, and we could see a pretty quick reversal. We saw a 1,200 point rise in the Dow yesterday, and that could disappear very quickly as well. But for right now, the trend is up. I'm watching this 410 area specifically in the spiders. Now in the NASDAQ, we're looking at the 290 to 300 level in the spiders, and you can see this three-step counter trend move. 290 is the shorter term resistance where leg 1 is equal to leg 3. Then above that resistance is at 300. In looking at the Russell, once again, you can see that it has traded through this 178 area. That's the next level of support, going down to about 175, and then resistance is at 190. Interesting in the Russell, you can see how today it approached 190, but then there was selling that came in and drove it back away from there. So it's going to be interesting to watch what happens on Monday's trading with the Russell. Now, the Russell has given us some preliminary indication previously as to the next potential turn in the indices. So I'm going to be watching the Russell pretty carefully. But right now, the trend is up, and for any regard to that, we just really need to watch what happens internally and then look for short-term support areas that may be violated, suggesting that this counter trend move may be complete. Now, I'm still calling this a counter trend move, counter trend rotation. It is deeper than I would have expected, especially in the Russell and especially in the Dow. But I am still calling it counter trend. Should we trade through 410 in the spiders? Should we trade through 190 in the Russell? Should we trade through this 300 level in the Qs? Then I'll change my my outlook on the market and suggest that we potentially are going up to test longer term resistance levels. Now, I also want to show one more thing. This is a chart. This is a different chart. I'm using TradingView here. This is the Dow Industrials, and this is the Dow Transports. Now, the transports, I don't have today's reading on it because I just get that at end of day, and it hasn't posted yet. The Dow Industrials, you can see, look at the difference here. Now, for the spiders, they're potentially just testing this area in the same realm of looking at the charts. The Qs are basically testing this area right through here, but the Dow is just on fire and testing this last high that came in on August 16th. So it's going to be very interesting, and through this whole counter trend move, the Dow Industrials have just really been on fire and dragging the other indices up with them. So it's going to be interesting to see how that intermarket divergence resolves itself. Also, I need to point out that the transports, there's a divergence, and if you're familiar with Dow theory, that the transports have not confirmed what's happening with the industrials. So that's something else to keep in mind for the coming week as well. Now, we reached a point yesterday of being extremely overbought. You can see that here. This is NYSE and this is the NASDAQ. We worked off some of that extreme overbought condition. We're still overbought, but we worked off the extreme overbought condition because the market internals were not as strong as they were yesterday. So it's going to be interesting to see here. This does not preclude the indices from trading higher on Monday, but it does suggest the potential that we might see some type of pause before we see a continuation of higher prices. Watch for short-term support areas. Those are going to be very important, and it's just going to be extremely important to watch what happens with those short-term areas. Keep in mind that the previous day's high and low are the first levels of support and resistance. 390 is going to be support in the spiders. Below that is going to be the open of the gap at the 385 area in the spiders, and then closing that gap. Now, a lot of times, if you see the gap will hold, but a lot of times, if you see the gap retraced about 50%, that means it's probably the higher probability is it's going to be completely retraced, which would be a move back down to this area, the 375 area in the spiders. Going to be a really interesting week next week. Strategically, I have to be leaning more towards the bullish side of the market, but I am leaning with a lot of caution, and I'm going to be watching what happens with price development, short-term support areas, and the market internals to see if this rally still has more legs to it, and if we're going to see the 410 area tested in the spiders. That's what I'm going to be watching very carefully, and what happens if and when that area gets tested. Have a great weekend. I'll pick this back up on Monday.